Welcome to our explainer. Let's be honest, investing can feel super overwhelming, right? Well, today we're going to cut through all that noise. We're going to build your personal investment blueprint by answering just three simple but really powerful questions. This is the dream, isn't it? We all imagine putting our money into the market and just watching it climb. A nice, steady upward line. It's the ultimate picture of financial success. But for so many of us, the reality looks a whole lot different. It's frustrating. It can be costly. So what's the deal? If everybody wants that perfect chart, why do so many people end up with, well, lousy returns? Well, the source material we're digging into today boils it all down to one single core idea. It argues that the biggest problem isn't about finding some secret stock tip. It's about something much simpler. We've lost the art of patience. Okay, so let's really unpack that, because this whole idea of patience begins with fixing a huge misunderstanding we have about what long-term investing actually is. And this, right here, is the massive disconnect. A lot of people today think long-term means holding a stock for, a few months? But, successful investors, they operate on a completely different clock. For them, long-term doesn't even start until you hit 5 years or more. Getting this one definition right, it changes the entire game. And that leads us straight to the very first question you have to answer before you invest a single dollar. When are you going to need this money? This is what we call your time horizon. So think about your own life for a second. Are you saving for a vacation next summer? That's a short-term goal. A down payment on a house in, say, 3 or 4 years? That's intermediate. Or are you planning for retirement way down the road? That is long-term. You have to know which bucket your goal falls into. It's the essential first step. And this brings us to a super important rule of thumb. If you need your money back in a year or two, stocks are simply the wrong tool for the job. Why? Well, because in the short run, the stock market can be wildly unpredictable. Even the best companies can see their stock prices go down. And if you need a story to really hammer this home, listen to this. The source material tells a cautionary tale about a man who invested his $80,000 nest egg, money for his wedding, and a down payment. He was hoping to grow it quickly. Instead, the market turned, and in less than a year, that 80 grand shrank to just 11,000. That's the danger of using a long-term tool for a short-term goal. Okay, so once you've got your when locked in, it's time for question number 2. You need to define your why. What is the actual purpose of this investment? What are you trying to accomplish? Generally speaking, it boils down to two main camps. Are you investing for growth? That's where you want your initial investment to get a lot bigger over time. Or are you investing for income? That's where you want your investments to act like a little money machine, generating a steady stream of cash for you. So really, it's about this. Are you trying to build a big mountain of wealth for the future? That's growth. Or are you trying to create a river of cash that flows to you right now? That's income. Knowing which path you're on is absolutely critical, because it totally changes the kinds of investments you should be looking at. Now, if income is your answer, then you need to know this one little word: yield. See, it's not just about how much cash a company pays you, it's about how much cash it pays you relative to its price. It's the magic number that lets you compare apples to apples when you're looking for income. And this is exactly why yield is such a game changer. Just look at this table. At first glance, you might think Jonas Co. is better, because it pays out $4, right? But wait, Smithco stock is way cheaper, so its yield is actually higher. It's a better income investment. And the bond? Even better. Yield just cuts through all the noise and tells you what you're really earning on your money. All right, we've got our when and our why. The last piece of the puzzle is the how. And this one is all about you. It's about defining your personal investing style, which really just comes down to your personality and how comfortable you are with risk. Honestly, the best way to think about this is with that classic old story. When it comes to your money, are you the slow and steady tortoise, or are you the fast and daring hare? So the tortoise, that's the conservative investor. They prioritize safety, they want to sleep well at night knowing their money is in proven, established companies. Then you've got the hare, the aggressive investor. They're willing to take on more risk for the chance at much higher returns, often by seeking out smaller, more innovative companies. Look, neither one is right or wrong. It's just about what's right for you. A conservative investor, they're basically looking for a giant redwood tree. They want those huge, stable, proven companies that are leaders in their field. The kind of businesses that have the strength to survive pretty much any storm. For them, stability is the name of the game. The aggressive investor, on the other hand, they're on the hunt for a sapling, a tiny little tree that could one day become the next giant redwood. They're looking for smaller, innovative companies with disruptive tech, the potential game changers of tomorrow. The goal here isn't stability, it's explosive growth. And that's it. When, why, and how. You've answered the 3 key questions. So now, for the best part, let's put it all together and actually build your personal investment blueprint. Okay, this chart right here is your roadmap. It's the big payoff. All you have to do is find your style on the left, match it to your time horizon, and bam, it points you to the type of stocks that are most suitable for you. We break them down by market cap, which is just a fancy word for company size. Large caps are the giants, small caps are the saplings. And just notice that bottom line one more time. For anyone with short-term goals, stocks are off the table. Period.
You see what just happened? By taking a few minutes to honestly answer those 3 simple questions, you've gone from being a hopeful speculator to a confident investor with an actual plan. You now have a framework that's built for your life, your goals, and your personality. So the only question left is, what are you going to build with it?